Thank you for coming. My name is Darren, as you probably saw on the promotional flyer, and I do actual US and Singapore, in this case, tax returns. And
Hi, I'm Tim. I'm a U.S. tax attorney, advise on U.S. tax.
a US taxpayer with a UK pension, which is not uncommon if you worked in London before you moved to Singapore. So if you were still in the UK, you can rely on the US-UK tax treaty, basically. But when you move to Singapore, there is no tax treaty between Singapore and the US. The question becomes, how is the UK pension, which you left behind but still exists because you can't touch it, how is it treated from a US tax perspective?
I have to say I don't work with pensions that much, but my first instinct is that if you can't qualify for the treaty, you likely will just be taxed to you as normal income, because the only thing that exempts the pension from taxation from a U.S. tax perspective is the treaty. Can use the treaty, won't be able to, but that's from my gut instinct, right? I haven't done any research into this.
Right. The treaty can be quite nuanced, especially when it comes to the definition of residence, right? So there are, under certain circumstances, I mean, you're physically here working for whatever in Singapore, but you may still have enough of a nexus with the UK to claim that treaty benefit. It's worth having a conversation with Tim or a member of his team to take a deeper dive into it to see whether potentially you or whoever it is may qualify. But generally speaking, the treaty is only something that can be relied upon if you're there, just generally speaking.